Yo, what's up, everybody? It's Friday, October 28th. Woo! Nice day in the market. Big day. Big day. Actually, I heard today that this month, the month of October, was the best October since 1987. 35 years. So, and I said, once we get that September tax train, look, I've been telling you all this like ahead of, how it's been playing out. Prior to September, I said September was going to have, we're going to get some difficulty because of that quarterly tax drain. We had it. Then I gave you the exact number. It was 155 billion drained. It took until... It was all the way until yesterday, or Wednesday actually, that it took to replace that drain. That September 15th tax drain, it took us all the way until October 26th to fully replace that 155 billion. But as it was filling back up, as the water, hold on. Just my lighting. As the water was coming into that swimming pool again after the drain, the market just kind of got lifted up, like the tide coming up. So now we are actually about 14.5 billion above the 155 billion. So we put back 155 billion plus another 14 billion. So that's like 170 billion has been added. So we are now above the level where that drain hit. And that explains everything. I mean, the Fed's going to raise interest rates next week by 75 basis points. And it's not going to make any difference. Or I should say that the difference that it's making, and I showed you this yesterday in a chart, and I also showed you the tweet by economist Warren Mosler, and nobody except for myself and Warren is talking about this, how these rate increases, I mean, we're literally going through another fiscal expansion with these rate increases in these interest income transfers from the government into the economy. And this is just getting started. I mean, we're not even really feeling the impact of the Treasury securities other than T-bills. We're feeling it in the discount on T-bills, but longer dated Treasuries, it takes time for those things to mature, and then new ones get issued, and they get issued with a higher coupon, and so this is gonna be elevated fiscal, elevated interest income transfers for a long period of time. So it's very positive news, and I'm giving you these dates. Originally I said October 6th we'd recover that drain, but it took a little bit longer. I forgot about the October 17th individual tax payment. That was small, though. I said it was going to be small. So best October in 35 years. Really nothing of negative consequence until, I would say, after the November quarterly interest payment, so we're on an upward trajectory until then, and really we're talking about around mid-December when there's another quarterly tax payment that's due. But I mean, it's just like, I don't know how else to put it to you. I think you guys understand it. If you've been following me now for a while, I see the comments, and you get it. You get it. But there's people out there who don't get it. It's still a monetarist view. And if the Fed, let me say this, if the Fed does mention anything next week about slowing down rate hikes, remember, you got all these monetarists invested in the bearish view. If you look at these surveys, the weekly AAII sentiment, I send that out to my subscribers every Thursday morning. We've been bearish basically for the last 49 weeks, almost a full year. There hasn't been we haven't had a bullish week. Bearish. And they're all invested in this monetarist view of rate hikes. I saw another headline today, like, fear of the Fed creating a global recession with another rate hike. I mean, we had 5 rate hikes, not even just the quantity of rate hikes, but the fact that these have been the most aggressive and the most rapid rate increases since 1981, since Volcker. And we basically have an economy now that is expanding under these rate hikes. But they just keep repeating that same, Cassandra, the sky is falling, it's going to happen. We're going to have a recession. It's going to be a terrible global recession. Just wait. I'm telling you, it's coming. Just wait. Meanwhile, you just look at the trend of what's going on. It's going completely opposite from what they're talking about because they ignore or they don't understand. Like I always say, there's 2 sides to every equation or environment here. I mean, you got the interest rate side, and I've explained it so many times. It's an income redistribution. Another thing that's an income redistribution. You see the earnings by Exxon. You see earnings by Chevron. I mean, inflation is income redistribution. Okay? I mean, the oil companies are just knocking it out of the park. They're just hitting home runs. I mean, you can protect yourself against inflation instead of just, oh no, poor me, prices are going up. I understand that, and nobody likes to pay higher prices. But as I've said so many times, there's ways to protect yourself. Anyway, the other thing I want to say, I saw another guy tweeting today, and it's funny how this just escapes people, but I could understand it because the optics look like it's true when it's not. And what I'm talking about is this guy said, someone asked me, not me, but it was this guy talking on Twitter. Somebody asked me if the government spends or it needs, it's kind of phrased like this. Someone asked me if, the government can spend without issuing bonds. And he said, no, absolutely not. The government must sell bonds in order to raise cash. Okay, now I know you guys, you're probably like rolling your eyes because you know what I'm going to say. You understand it now. Okay, now I get it that the optics looks like that. It's like, oh, we got to raise the debt ceiling or we got to sell these bonds. You can't. Okay, here I go again. We'll try to say this as simple as possible. You can only buy government securities, treasury notes, bonds, T-bills, whatever. You can only buy them with US dollars. The dollars have to exist first before anyone can buy a US treasury. Therefore, the dollars have to be put there into the economy so that people or institutions have dollars to buy treasuries. So the government must, it's not a question of, can it, is it a better arrangement? The government must spend first before it sells treasury securities. Otherwise, nobody would have the dollars to buy treasury securities. There is no other way. And it's not the Fed giving money to the Treasury. The Fed cannot buy securities directly from the Treasury. All right, it's not allowed to do that. When the Fed buys securities and adds reserves, deposits into the banking system, it's buying from people and institutions that have already purchased those securities. So again, it is impossible for the government to sell treasury securities, in other words, to quote unquote raise cash. It has to spend first and put the cash into the economy. But, people are just told the wrong thing. They're taught the wrong thing, and I get it. Like the optics, it looks that way. Yeah. It also looks that way like when we're paying taxes. I get it. Like it doesn't only look that way, it feels that way. I had to pay taxes last week, and you're writing that check or you see in your bank account getting reduced, and it's very, very easy to come under the belief or the view that, hey, it's my money is funding the government. No. In order for us to have dollars to pay our taxes, because that's the only thing that the government will accept for payment of taxes. Like you can't give them gold, you can't give the IRS gold, you can't give them your car, they will tell you, go sell the car, get some dollars, sell your gold. The dollars have to be put there first. So the government spends, the money goes into the economy. We all engage in business and we work and we sell our labor or whatever and we earn dollars, and then the government takes some of those back in the form of taxes. But there's 28 trillion or 31 trillion dollars still outstanding. That's what they call the debt. It's not. It's just the amount of dollars that have not been taken away in the form of taxes. 31 trillion. All right, that's the government so-called debt. If the government wants to remove that debt, it has to take away that 31 trillion that we all hold. Actually, it's like the public owns 25 trillion. So it would have to take away from us 25 trillion. And you saw what happened to the economy when it took away this year 1.7 trillion. So, it would literally have to take away 15 times that amount. That would be a global depression, an order of magnitude we have never seen before, probably in the history of mankind. If that were to happen. If people wanted to eliminate, that stupid debt clock thing that we see all over the place. There's one, I don't know if it's in Times Square here in New York. There's one down on Union Square with that stupid debt clock. What always gets me is they never have an asset clock next to that. It's just a debt clock. If you want to take that away, that would create the biggest economic depression in the history of the world. The government would have to literally seize 25 trillion from the non-government. That's us, that's foreign sector, that's everyone that holds dollars. So that debt, what they call a debt, those are really just untaxed dollars. All right? And that comprises part of our wealth. That's part of our wealth. In financial wealth, there's real wealth too. Real wealth is, everything we have around us, our infrastructure, our roads, airports, our health facilities, our food, clothing, and shelter, our transportation, our information, our education, all those things are our energy. That's real. In other words, real, you can touch it, right? Not like one's real and one's, a fantasy. Real meaning, you can touch it. It exists in some kind of physical or some form that you could, The other is financial wealth. It's like bank deposits. It's like, stocks, other ways to store financial wealth, treasury securities, whatever. If you take it away, the government is not a negative, but who cares if the government is a negative, because it is the, it's the sovereign. It creates the money. The government, think of it this way, the government is a maker of money and a taker of things, right? The government creates the money, but it pays for stuff. It has to provision an army. It has to build infrastructure. There's other things that the government, a myriad different things that the government does. So the government is a maker of money and a taker of things. not a taker in the sense like it's taking it away, it pays for it to provision itself. And the non-government, the economy, is a maker of things and a taker of money. Okay, we make the stuff, whatever it is, roads, bridges, infrastructure, airports, medical facilities, teachers, firemen, the military, guys in the military, women in the military, all that stuff. We're the maker of things. The government is the taker of things. The government's the maker of money. We are the takers of money. That's it. It's no big scary thing. That's the arrangement. And it's fine. And nobody's in debt. Everything got paid for. And that's it. And again, it is impossible. I don't know how much more emphatic I can be. I'm just going to state it. It's impossible for the government to sell treasuries to raise cash. It's impossible unless it spends first and puts the money there, puts the dollars there. There's no other way. Again, you cannot take water from a swimming pool if there's no water in it. You got to put the water in first. It's not hard to understand. Anyway, that's it, folks. Hey, it's Friday. Go out, enjoy, and have a great weekend, and I'll see you on Monday. Bye.